Welcome traders to this video brought to you by Admiral Markets. Last week, of course, there was the NFP non-farm payroll figure for the US, and that was a pretty bullish number. So will we see the USD, US dollar rally again? The fundamentals look good, but today's video we're going to take a look at the technicals on the euro dollar, pound dollar, dollar yen, and AUD USD. First of all, though, please be aware that this video is intended for a global audience. Make sure it is suitable for you to watch by going to admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that the risk disclaimer is valid for this video as well, and trading for exchange can be considered higher risk and may not be suitable for all traders and investors. This video is not advice and is for educational and informational purposes only. And by continuing watching this video, you agree with this disclaimer. All right, time for the charts, and let's take a look at what's going on the euro dollar. Of course, a week ago we were discussing the bearish monthly candle, a very strong monthly candle, in fact 1000 pip bearish month, and we retraced indeed part of that candle up to the 38.2 fib. If we put that fib on the monthly candle, that's why it's looking a bit odd perhaps on this chart, and this weekly chart that is. The 38.2 fib here though is the bouncing spot with this weekly wick here that we saw last week. So the bullish NFP figure that we saw on the dollar creating this pretty big wick, so it looks like we are set for some downside. Now I would still be a bit cautious because the euro dollar trend has already lasted quite a while, so we might not only see a retracement of last month but even a bigger retracement. So in that regard, I do think that the dollar uptrend and the euro dollar downtrend here it will not change. Question is, will we get that downside this week, or will it happen later? And that is a bit more of a question mark. So for me, I'm keeping an eye on the support line like this, for instance, and keeping an eye on the 4-hour chart then to see how it breaks. Because a break itself is for me not enough as yet. A break itself is interesting, but could easily turn into a false break and we get a correction up to the 50 fib. Something perhaps like this. Down and then up again, up to the 50 fib, and then perhaps again, of course, a resistance spot for downside. Now there's not, a 100% guarantee method to avoid trades like that. That's of course always the case, that there is that risk and we can't avoid it. There is one method though I'd like to use, and that is just the candlestick patterns when they break. When price breaks through that trend line, I want to see solid candles with sizable, good size. I mean, a close near the low. And I do not want to see big wicks at the bottom. So if that happens, if I have a good breakout candle, the odds of a breakout indeed flourishing and going to take profits increase. So that's what I want to see, and that will help a bit, at least, with avoiding these false breakouts. Otherwise, the price is still stuck in this triangle, and a bullish break could be interesting for a small little move up, but the 50 fib is certainly something I'm looking to be very cautious of, and looking for shorts at the 50 fib for more downside. Not only is it the retracement halfway of the monthly candle, but we got a big zone in here that could be resistance, and that would be very interesting. So I'm looking for shorts from the 50 fib. Small breakout trades perhaps to the upside, not very interesting, but intraday trade perhaps there, and otherwise breakouts below it. All right, but with the caution that I don't want to try to at least avoid the false breaks here in case it does move up to the 50 after that. Before I continue with the charts, just a quick heads up that actually regarding exits, we have a webinar on Thursday, exiting trades as a Forex Pro. So join then if you would like to get a bit better in exits. And I think that everyone can actually use that practice. So many traders focus on entries, but exits is actually just as or even more important. Other webinars, of course, this week, weekly FX recap on Monday, Wednesday, expert opinion, Tom the market lines, by the way. And then Tuesday, Wednesday, we have the trading room labs, moving average, and strategy. This is the pound dollar, looking a bit different than the euro dollar. First of all, it didn't have a big wick at the top of the candle last week, but it actually has a bullish candle here. And the whole structure, of course, is a bit different. First of all, we are very close to this support level. And if we would maybe put a fib on, perhaps we're right at the 886, I'm not sure. Yeah, we're pretty close to that 88.6 fib. Of course, the pound uses that fib a lot. So we are at a bigger support level where the pound could bounce. We've moved up a lot, we've moved down a lot, and we're back to that same beginning spot as July 2013. So this could be a bit of a bouncing spot, and I think that's why we're seeing such a headache here with the downside, with the downtrend continuation. And in fact, in the meantime, perhaps at a very important talking spot, if we connect this trend line here to the tops, you can see the price is right at that resistance trend line. So a break above that trend line for me is very important signal of a potential downtrend completion and a uptrend or consolidation start. So I'm not jumping in along right away when this happens. By the way, for me, it's a signal, it's a trigger of end of downtrend and cautiousness with the downside for the moment. Upside could be true. I mean, I could be looking for upside trades, but first of all, after the break, I want to see a clear higher low before trading that to the upside. All right, dollar yen is in a very bullish mode here, of course, when you're looking at the bigger picture. However, more recently, of course, we see this consolidation on the 4-hour chart, and you can see the price is correcting. So I'm still a bit cautious with this particular surge here. It could indicate the start of the uptrend, certainly possible. I'm just a bit cautious as yet because to me, there's also a pretty decent chance of a bigger consolidation taking place. And the consolidation could easily take something like this, where we have these two trend lines like that, and this could actually be a turning spot for one more downside before we get the bigger boost up. This consolidation here is a triangle potential, and I'll show you how. This could be an A, and then we get the B, and then we get the C here, and then we get the D here, and price could go down for E to complete the correction triangle before heading up again. All right, certainly an uptrend, no doubt about it. But currently, the consolidation is pretty massive, and a continuation of that triangle basically could occur right now, right here, and perhaps move down and then up again, like this and then we get the break. So, has this triangle completed, or has the correction completed, I should say, with only seeing, well, not only, but having seen this price action? That is the question. For me, I'm still more cautious and still more expecting a lower retracement point. If price does push through this resistance line, I'm just going to monitor it and keep an eye on it. I want to see still a bit more proof. First of all, perhaps to see a break above the daily point here at 102.75. Well, sorry, not 102, 120.75. A break above 120.75 is pretty important because otherwise anything below that level could technically still easily belong to that triangle. Last but not least, the EURUSD. Indeed, we got downside last week as expected when looking at the weekly chart, so that was good. But during the week later on, there was actually a bit of a bullish bounce. So yes, we did get the downside as explained in this video 1 week ago, but then we got a bit of a bounce. And this daily wick here shows that bounce, and just price went sideways after that. And 4-hour chart shows that as well. So at the moment, if anything, it could be perhaps inverted head and shoulders. It's difficult to say. The dollar trend here, of course, still very strong, but the bounce was pretty aggressive as well. So that indicates that the momentum shift is perhaps occurring, and the downtrend here not as strong as it once was. So keeping an eye on various trend lines, basically like this. Oh, that's the wrong one. As I'm adding the lines like this, for instance, keeping an eye on those trend lines right like that, to see where price will break and what kind of potential it has in the near future. If it breaks, of course, the support line, there could be a breakout to the downside. If it does break the upside, it could be a bigger momentum shift for the Aussie to the upside. So preferably, of course, the trend is down, so I like the bearish break more. The bullish break would be one where I want to see still a hook back before taking it long on this EURUSD. This wraps up the video here for Admiral Markets, and we would look forward, of course, to seeing you in the webinars of this week. Make sure to take a look at the social media of Admiral Markets as well, and we wish you happy trading and good hunting. Cheers.